Hello students, today we are going to do a quick revision of Essay 240. Before that, if you liked the video, please don't forget to like, share and subscribe. So today we are going to do a quick revision of Essay 240, the auditor's responsibilities relating to fraud in an audit of financial statements. So what is fraud? We can learn the meaning of fraud. Fraud is an intentional act, whereas error is an unintentional act. Fraud is committed by proper planning and collusion with others, but error is an unintentional act. So fraud is an intentional act involving the use of deception. To obtain an unjust or illegal advantage. That is, we are properly planning and doing it. Humans are prone to error. Error can happen to anybody, but fraud is an intentional act to deceive and to gain some monetary gains from the company. So, how the auditor will deal with this fraud in the financial statements? That's what we are learning in this standard Essay 240. The objectives of the auditor is that he should provide a reasonable assurance that the financial statements are free from material misstatements. FFMM means free from material misstatements. You should give a reasonable assurance. The auditor can only give a reasonable assurance. There is always an unavoidable risk in an audit that a material misstatement due to fraud or error may not be detected. That is because of the inherent limitations of the audit. There is always an unavoidable risk. So what is inherent limitations of audit? One of the inherent limitations of audit is that in audit we will only get a persuasive audit evidence and not conclusive audit evidence. Persuasive audit evidence means it's most likely to be true than not. And conclusive audit evidence means only that is true. An example of persuasive audit evidence is rent agreement. That means it is, if we verify a rent agreement, it means that it is most likely to be true than not. That is, we believe that it is true, but we cannot say that only that is true. Since in an audit we are only getting a persuasive audit evidence, we can only give a reasonable assurance. Had we got conclusive audit evidence, we could have given absolute assurance. That means 100% assurance. But since we are only getting a persuasive audit evidence, we can only give a reasonable assurance. Also, the risk of not detecting a material misstatement resulting from fraud is higher than the risk of not detecting a misstatement from error, because fraud involves proper collusion and planning. Therefore, it is more difficult to detect a fraud. Also, the risk of material misstatements due to management fraud is higher than the risk of material misstatements due to employee fraud. We can easily detect the employee fraud than a management fraud, because management is in the higher position and they can override the internal control more easily than an employee, because they are on the topmost position of a company. They can have a better overriding of control, that is a management override of control, than employees. And also we are getting written representations from the management. The auditor is getting written representations from the management. Therefore, a fraud done by a management is hard to detect than a fraud committed by an employee. Now we can learn what are the types of fraud. There are two types of fraud. First one is fraudulent financial reporting and the second one is misappropriation of assets. So what is these two types of fraud? We can learn in detail. So now we can learn about the first type of fraud, that is fraudulent financial reporting. In that we have got 7 points. Now we can look at the points one by one. The first one is recording fictitious journal entries, particularly close to the end of an accounting period, to manipulate operating results. So, there is a question based on this, which was asked on November 2013, that is, an annual retainership fee of 60 lakhs was provided in the book close to 31st March, and when enquired about the same, we got no response. There was no documentary or other evidence to support this fees. That is, it was just a book entry, or it was just a fictitious journal entry which was put close to the end of the accounting period to manipulate the results or profit of the period. That is, it was just a book entry and not a real transactions. So that is the first one. Second one is inappropriate assumptions and changing judgments to estimate account balances. That is, we continuously changes our judgments to estimate account balances to manipulate the results. Third one is altering records related to significant transactions. The fourth one is intentional misapplication of accounting principles, engaging in complex transactions that are structured to misrepresent the financial positions and financial performance. Financial position means position on balance sheet. Financial performance means profit and loss account. That is financial performance during the year. So, we will enter into complex transactions to disrupt our positions, that is financial position as well as financial performance during the year. Concealing facts that affect the amounts recorded in the financial statements. Omitting, advancing or delaying the recognition of events or transactions occurred during the year. Omitting means one transaction happened during the year and we didn't record it in our books of accounts. Advancing means a transaction of the next year, we are recording it in the current year to manipulate the result of the current year. Delaying the recognition means a transaction has occurred during the current year but we didn't record it in the current year. Instead, we delayed it to the next year. So, these are the instances. Of fraudulent financial reporting. So, there is 7 points in it. We can learn it by remembering it like this. So, we have got 5 points related to accounting. That is recording accounting entries particularly close to the end of the year, changing accounting estimates, altering accounting records, misapplication of the accounting principles, accounting complex transactions to disrupt the financial positions and financial performance. So, we can remember this keyword accounting, and there is 5 points related to accounting. Then the next point is concealing facts regarding the amount given in the financial statements, and the last one is omitting, advancing and delaying recognition. So, these are the 5 plus 2, that is 7 points in the fraudulent financial reporting. Now we can learn the next type of fraud, that is misappropriation of assets. So, what are the assets of our company? Yes, cash, debtors, inventory, tangible fixed assets, intangible fixed assets, etc. So, we can make the points by remembering these assets in the balance sheet. Okay, the first one is embezzling receipts. Embezzling receipts means, an example is that diverting receipts in respect of written off accounts to personal bank accounts. That means in the books of accounts that a particular account may be written off from the books of accounts, but we received after some time or after some years we received some amounts relating to that account. what the accountant can do is that he can divert such amount to his personal bank account, that is embezzling receipts. Second one is stealing physical assets or intellectual property. Example of that is that stealing inventory of the company for personal use, or colluding with a competitor by disclosing technological data, that is an intellectual property, in return of payment. So that covers the tangible fixed assets and intangible fixed assets. Causing an entity to pay for goods and services not received. Using an entity's assets for personal use. Example, using the entity's asset as collateral for taking a personal loan from a bank. We keep the entity's assets as collateral. So we can write these points by remembering the assets in the balance sheet. Now we can learn the next question, that is fraud risk factors or characteristics of fraud. That is, what is fraud risk factors? That is, in case if these things are present in an organization, it may be an indication that fraud may be present in the organization. We are not saying that fraud is there, but there is chances that in case if there is this fraud risk factors, there is a chance of fraud. We should be more alert in case if these conditions are present. So first fraud risk factor is that incentive or pressure to commit fraud. That is, the employee is under pressure to achieve an unrealistic target, so he may resort to doing fraud to achieve those targets, or he has some personal financial obligations, so he resort to fraud, or if there is an adverse relationship with the employer, there will be an incentive or pressure to commit fraud. Next one is, there may be opportunity to do fraud. Example is that opportunity arises when an individual believes that internal control can be overridden, inadequate physical safeguard over cash and inventory, that is, there is no proper internal control, anybody can misappropriate those, so there is an opportunity in the company to commit a fraud. Inventory that are small in size and of high value. Example, diamond, it is a small value inventory but it is of high value, so it's easy to, or there is an opportunity to commit fraud there because we can easily steal it, so there is an opportunity. And the third one is attitudes and rationalization, that is behavior indicating dissatisfaction, changes in lifestyle, disregard for internal control by overriding existing controls. That is, for a particular employee, if there is a change in lifestyle or his behavior, it is an attitude which indicates that there may be a fraud, or if he has a disregard, that is, he does not follow the internal control of the entity, it may be a factor that indicates fraud, or if he has a big behavior indicating dissatisfaction. So these are all indicators of fraud. Okay, so these are the fraud risk factors or characteristics of fraud. We have got 3 points here: I, P, O, A. That is, I for incentives, P for pressure, O for opportunities, A for attitude. So you can remember it by this synonym IPOA. Fraud risk factors is equal to IPOA, that is incentives or pressure, opportunities and attitudes and rationalizations. Now we are going to learn what are the responsibilities of the auditor. The primary responsibility of detection of fraud is with the management and TCWG, that is those charged with governance, and not the auditor. It is not the primary responsibility of the auditor to detect the fraud. The management and TCWG should detect the fraud. In case if as a result of fraud or suspected fraud, there is exceptional circumstances, that bring into question the auditor's ability to continue doing the audit, he should first communicate the matter to the management and TCWG, and if required by law, to appropriate persons. Further, if he finds that he is unable to conduct the audit, then he should withdraw from the management if possible. And if he decides to withdraw from the management, he should discuss the reasons for his withdrawal with the management and TCWG and report to the appropriate persons as necessary. So this is the responsibility of the auditor in case if he encounters fraud. This is the responsibility. First one, he should communicate to the management and TCWG, and if he is unable to continue the audit, he should consider withdrawing from the audit. And if he withdraws from the audit, he should again communicate to the management and TCWG the reasons for his withdrawal, and he should report to the appropriate persons. So these are the 2 points. So this is the responsibilities of the auditor. So that is all relating to the standard SA 240. We have covered the important portions. So this is an exam tip that I am showing you now. In case question related to fraud comes in exam, what all points should you write in the exam to score good marks? So first you have to mention about SA 240. Then you have to mention what is the approach of the auditor, that is reporting to the management, withdrawing from the engagement, that is you have to write this portion. This is the approach of the auditor. That is communicating to the management and TCWG, withdrawing from the engagement, discussing with the management and reporting to the appropriate persons. So you have to write that approach of the auditor, and you have to mention about section 143(12) of the Companies Act 2013. We will learn it in detail in Companies Act 2013, but I will give you an overview. So according to section 143 subsection 12 of the Companies Act 2013, we need to, in case if we found a fraud, we need to report the matter to the central government in case the amount of fraud is 1 crore or more. We need to report the matter to the central government, and in case if it's less than 1 crore, we should report the matter to the audit committee or board. So we should mention that point, and we should also mention, as per clause 10 of paragraph 3 of CARO 2016, there is a clause in CARO 2016, that is clause number 10. We have to, in case we have found a fraud, we have to report it. That is, whether any fraud by the company or any fraud on the company has been committed, we need to indicate the nature and the amount involved in clause 10 of CARO 2016. So we need to write all these 4 points in case a question related to fraud comes in exam. That is, we should mention SA 240, approach of the auditor, section 143 subsection 12, and clause 10 of CARO 2016. So this was a quick revision of SA 240. Hope you liked the video. Thank you. And don't forget to like, share and subscribe.